Hello, everyone. Welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Just want to pause briefly and congratulate the recent winner of the February Blue Jacket competition, Debiho. Sorry about the pronunciation. And stay tuned for more information about the next upcoming Blue Jacket competition. For those of you who've seen my webinars before, please bear with me. I want to make sure everyone understands my approach to trading. So here are the key tenets. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. I think that certainly applies to large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of the trades and they hedge their delta exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of the trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I'll look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding expected trading range, expected trading range, and as well as the directional bias for the day. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm a thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset setups, and that asset can take in with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. And we'll certainly be going through both of these steps today. Questions and comments are welcome, and I'll be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, Stephen. Welcome. Glad you're here. All right, here's my agenda for today, Friday, March 20th. First of all, I want to go over news items for today, and then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's start with options expiration today. This is a large near end of quarter, so a quarterly monthly options expiration. And these monthly options expirations mark March, June, September, December are usually the largest expirations of the year. So what this chart is showing, this is the Spotgamma dashboard home screen. This is showing market makers delta notional on the vertical axis by expiration date on the horizontal axis for the S&P 500, Nasdaq, and Russell 2000. Orange bars show positive or call delta notional, and blue bars show negative or put delta notional. So this is indicating that the options expiration, the current options expiration, that's right here, is put dominated. And typically there's an expectation for a move higher after a put dominated options expiration. So traders are long puts, market makers are short puts, and those puts expire, and market makers can buy back their short hedges. Could lead to a 1 or 2 day bounce, but I think in this case we'll just have to wait and see with all the geopolitical influence on the market, the war in Iran and price of oil, so that that normal reaction may not hold true. So we'll talk about that next week. All right, so that's options expiration. Also, my understanding is that Jerome Powell is speaking now, began speaking at 1:30. So we'll see if there's any reaction in the market. All right, so it's been an eventful week. And now let's move on. Let's take a look at the ES futures and Bookmap, making a new low for the day. So maybe there was a reaction to what Jerome Powell is saying. All right, so again, this is the ES futures and Bookmap. And let's see any notable levels here. 6,600. This is the SPX 6,600 put wall. So SPX trading down below that, down below the ES lower daily expected move. Headed down to the SPY 650 put wall. And note also at this point, SPX is breaking down below its lower daily expected move. So I do calculate the ES and SPX expected moves separately. So we'll see that in just a minute. All right, so let's step back. Let's take a look at our higher time frame. I'm going to go to the other underlying index. This is the SPX, the underlying index for the S&P 500. So this chart showing April 25, 2025 rally ended up in consolidation this year, and now SPX is rolling over. It looks like making, let's zoom in on this, right at lows from last October and November. Remember, this was the October 10th tariff tantrum, little mini tariff tantrum. I believe this was the reaction after the NVIDIA earnings. So SPX down, testing those levels, and also its lower daily expected move. All right, let's take a look at a little bit shorter time frame. Let's go to the 30-day 1 hour chart. This is a linear regression channel showing SPX making lower lows, lower highs. Now SPX is down below its lower daily expected move, which is 65.40. Note I do post the expected moves every day in Discord for SPX, ES, and NQ, and I post those the day before. All right, so let's take a look at the expected moves now. First of all, let's start with a weekly expected move shown by the dashed purple lines. This is based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. And then the dashed blue lines again showing the lower and upper daily expected move. Those levels do change every day. And again, I post those levels in Discord every day the day before. All right, those are the expected moves. All right, let's take a look at the Spotgamma levels on this chart. They're based on gamma-weighted open interest. They're provided to Spotgamma subscribers. They're available on a variety of trading platforms. They're shown by the dark red lines. So let's focus on the key daily levels. We'll start with the put wall. Put wall has moved up to 6,600. That's a strike with large net negative gamma that can be expected to act as support. And note, SPX did gap down below the put wall today. And it did shift up higher from yesterday. So the put wall has oscillated between 6,600 and 6,500. Now back up to 6,600. I would not be surprised at all if it moved down to 6,500 or even lower on Monday. So we'll check on that on Monday. All right, so that's a put wall. Next level up is the volatility trigger at 6,800. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, in a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And we'll take a closer look at gamma based on Spotgamma's newer synthetic open interest model in just a couple of minutes. These levels are based on their older total open interest model. All right, so that's the volatility trigger. Next level up is the absolute gamma strike at 7,000. That's a strike with large absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated. Then finally, the call wall remains at 7,100. That's a strike with large net positive gamma that can be expected to act as a resistance. And certainly, the call wall and the absolute gamma strike are not in play anytime soon. All right, shifts in levels. Again, the put wall shifted higher, and that was the only SPX level that shifted compared with yesterday. All right, let's wrap up our view of SPX by going shorter term. Let's take a look at a 1 minute chart. Again, ES trading down, lows of the day. Take a look at SPX. All right, downtrend. So there was a sharp move up yesterday afternoon. Then this downtrend continued overnight. SPX gap down below its 6,600 put wall. Traded down to this combo level, 65.47. Then the lower daily expected move acted as support and now maybe resistance. All right, so that's SPX. Though there was quite a long period of chop here from 10:15 to about 1:30. And again, maybe Jerome Powell speaking had something to do with this drop below the combo level and the lower daily expected move. Zoom in on them. All right, that's SPX. Let's wrap up our view of the underlying indexes with SPY. So SPY, so far today, no Spotgamma levels in play. But the put wall is just down below. And we saw that on the Bookmap chart. So there's the put wall for SPY at 650. And by the way, for SPY, the volatility trigger put wall and call wall all shifted lower. Call wall at a very odd number, 662. There's the volatility trigger absolute gamma strike at 660. So again, the volatility trigger put wall and call wall all move lower for SPY compared with yesterday, and that is a bearish hat trick. All right, back to Bookmap. All right, so I focused on SPX and SPY levels, and I have those levels on my chart. Again, there's the SPX 6600 put wall and the SPY 650 put wall down below. I also have key ES levels, like the lower day the expected move. Again, I do calculate that separately from the SPX expected moves, since ES and SPX close at different times in the afternoon. And TJR highlight, welcome, glad you're here. And MT, welcome, glad you're here as well. And we'll talk about setups in just a couple of minutes. All right, note there is a difference in price between ES and SPX. So with a rollover this week, the ES to SPX offset has increased substantially. Today it's about 50 points. So I'm showing SPX 6600, which is this number right here, at ES 6650. And note that SPY to ES relationship also changes every day. Note it did increase a bit, actually quite a bit today due to the SPY dividend. And I do post the index relationships that I use every day in the Options Dash chat channel. And Jalil, sorry about the pronunciation, welcome, glad you're here, asked how to convert SPY and SPX levels to ES. Sure, let's take a look at that. All right, so first of all, let's go to ES to SPX. And in Thinkorswim, you can put simple equations in a watch list. So there's the ES to SPX. Note that is the continuous contract, so it updates automatically. So on Monday, it rolled over to the June contract, and it's showing that at 50. Then here's the NQ'd NDX offset, and it's a much larger number, so I give it a little bit more leeway. I'm using 210, so it may be closer to 215 now, but I round it to the next 0 and 5. All right, so that's the ES to SPX offset. All right, for ES to SPY, what I do, let's go back to the SPY chart. And I've got a little script that runs in Thinkorswim that calculates this information automatically. So there's the ES to SPY. Looks like it has changed a little bit during the day. Right now I'm using 10.1157. And it looks like it is closer to maybe 10.1164. So that will make a bit of a difference. So that's what I use to show these levels on my chart. And I use the price lines add-on to show these lines and labels on the chart. All right, so we'll talk about setups in just a couple minutes. Let's take a look at Nasdaq. So this is the NQ futures of Bookmap. Underlying index components are NDX and QQQ. So let's take a look at those charts. I'm going to start with QQQ. Zoom in on this so you can see QQQ attempted to rally and then now broke down below its 590 put wall. Down below this combo level. And still moving lower, it looks like. All right, the other underlying index component, NDX. Zoom in on this. All right, so we know QQQ broke down below its put wall, and NDX gap down, broke down below this combo 1 level, 24,233, down to and below its put wall. All right, below the 24,000 put wall, there are 3 more Spotgamma levels down below. All right, so NDX trading down below its put wall, and we know QQQ trading well below its put wall. All right, back to Bookmap. All right, so again, I have the underlying index components shown with these lines on the chart. You can't see the label there, but that's the QQQ put wall. Nice entry point for a short. Right around 945, that's when things really broke down. And then there's the NDX 24,000 put wall. And then also the NQ, lower day, the expected move. Price NQ broke down below that level. Then that level acted as a resistance. So Nasdaq also trading down, lows of the day. And again, we'll talk about setups in just a couple of minutes. All right, so let's wrap up our positional analysis by taking a look at Gamma. This will give us a sense of the potential movement and volatility for the day, and then what might happen after expiration today. All right, so let's go to the Trace Gamma heat map. So the levels that we just took a look at are based on open interest, which is updated once a day sometime during the night. Spotgamma applies their algorithms to that data, but it is updated just once a day. Now, this is the Trace Gamma heat map showing market maker's position, Gamma position for SPX for today. It's updated every 10 minutes. Red shading indicates negative Gamma. Remember, in negative Gamma, we're looking for higher volatility. Market makers trading with price to hedge their delta exposure. Blue shading shows positive Gamma. Positive Gamma, remember, we're looking for lower volatility as market makers trade against price to hedge their delta exposure. Let's step back in time. Let's go back to the morning. 10 o'clock should be good. So remember, for SPX, which we're looking at now, there are 2 expirations. There's the AM settlement and the PM settlement. And the AM settlement, the early morning or the expiration at the cash open, is the traditional options expiration for indexes. And then when weeklies started coming out, the weeklies always expire at the end of the day. All right, so what this is showing is this is the 9:30 cash open right here. So you can see some of the Gamma already coming off. Bright red shading to the left of the line, and then lighter red shading to the right. So some of the Gamma has already expired, and then more will expire 4 p.m. in today. And note all this positive Gamma up above is coming off, as well as the positive Gamma down below. So a little bit of an adjustment to the gamma landscape, and we'll get a closer look at that on Monday, so be sure and stay tuned. All right, so right now, what's important? Is the current view of gamma. And note, SPX has been trading up and down around its spot gamma implied one-day move low. So this number is based on the opening price for SPX, whereas the expected moves that I post are based on the closing price. And now SPX moving slightly lower. So the trade this morning was this right here. That was it. All right, but key point again, SPX trading in negative gamma with a low, very low stability index. All right, so let's move on now. So we know we're expecting higher volatility in this negative gamma environment, and then also a very heavily news-driven market. All right, so let's move on. Let's move on to execution now. Let's take a look at some setups. And I'm going to start by taking a look at what options traders have been doing today. And I'm going to start with the S&P 500. So this is the S&P 500 index signal, hero signal, for the S&P 500 index components. We've already taken a look at a couple of those, SPX and SPY. So this also includes options trades and market maker hedging activity for ES and XSP, all four of those S&P 500 index components. So the white line is price, and the purple line is the hero signal. Again, for options trades for those four index components. A rising hero signal indicates traders are taking positive delta options positions. They are buying calls and or selling puts. Market makers take the opposite side of the trades and they hedge their delta exposure by buying ES futures. And then a falling hero signal indicates traders are taking negative delta positions. They are buying puts and or selling calls. Again, market makers take the opposite side of the trades and they have to hedge their delta exposure by selling ES futures. So let's zoom in on this. I'm going to focus on this, I guess really the main move of the day was this short right around 945. All right, so you can see this peak pattern in the hero signal. Sharp reversal, very reliable bearish signal. And that was right around 945. Let's take a look at the equities. So the signal that we just took a look at is the index signal, showing options trades again for those four index components. And this is showing options trades of market maker hedging activity for all 500 stocks in the S&P 500 index. It's a little bit slower moving and often a better indication of overall price for the day. But the index signal, I think, typically shows the turning points a little bit more clearly. But it was very clear what was happening by looking at this signal today. Traders taking negative delta positions. And then a sharp drop just after 945. We'll shift to puts and calls. Orange line shows calls, blue line shows puts. For extra insight, so this is showing that traders were selling calls from the open, taking advantage of high volatility, selling calls. Sorry about that. Auto zoom. All right, go back. Zoom in on this. All right, traders selling calls from the open. Put line was pretty flat, maybe selling a few puts. Then, I guess 946, traders continued to sell calls, started buying puts. That's bearish momentum with both the blue line and orange line moving in the same direction. It's a very powerful directional indicator when both lines move in the same direction. In this case, it was bearish. So that's equities. Back to the index signal. We've separated out puts and calls for extra insight. So we know traders selling calls and selling puts from the open. Then 946, put sellers take the foot off the gas, start buying a few puts. Traders resume selling calls and price moves lower. All right, back to Bookmap. So we know what options traders are doing. So let's go to Bookmap. Let's zoom in on this. Say from about 9 to 12. All right, I thought this was a good short entry right here with that test of VWAP. So here's the cash open. Reversal just below VWAP, light blue line. First pullback, 945, 946. See the small green volume dot there. It looks like buyers were exhausted. Volume dots in Bookmap show market buy minus sell. Green volume dots indicate more buyers than sellers. Magenta dots more sellers than buyers. And you can see as ES breaks down below the SPY 656 level, aggressive sellers start to come in. Cumulative volume delta shown by the dark blue line there drops. Also sell stop order shown by the yellow line helps to fuel the move lower. And down to around the Spotgamma 1 day implied move low. And then again, remember that large, long session of chop up and down around that level. So that was the I thought the key setup today in the S&P 500 was that short right around 946 as traders were taking negative delta positions in both the S&P 500 index components and the S&P 500 equities. All right, note that large traders were fading this move with iceberg orders, shown by the rising light blue line, and that might have been what slowed down the S&P 500. You can see some more green volume dots coming in, rising cumulative volume delta. But they could not get price moving. And then now, ES has broken down below this pretty sloppy chop and broken down below that Spotgamma implied 1 day move low. And again, next target down below is the SPY 650 put wall. Shown right here. So that's the next target down. All right, so that was the setup for the day, I thought. 946 short. Any number of ways to trade that. Sell futures, sell SPY shares, sell an SPX or SPY call spread, or buy a put spread. Any way you like to trade with futures, stock shares, or options. All right, let's take a look at Nasdaq. Nasdaq, similar setup. Breakdown at the open, pullback. Note NQ did not reach the did not reach VWAP. And that's a reversal at the QQQ 590 put wall. And now trading down lows of the day. And then finding resistance now at the NDX 24,000 put wall. Orange line, cumulative volume delta, falling for the day. Yellow line showing stop orders, both falling. Large traders, just like ES, were fading that move, did not get their way. Now they've taken the foot off the gas. That's with iceberg orders, shown by the light blue line. All right, let's see what options traders are doing. Let's go back to Hero. We'll first go to the Nasdaq index signal, showing options trades and market maker hedging activity. For the Nasdaq index components, we've already taken a look at those, QQQ and NDX. This looks like this is probably NDX. And this is typical at expiration. Rollover in some fund that uses NDX. Let's check on that. Check on NDX. Yep. That affects the call line in NDX. Let's go back to NASDAQ. Let's zoom in. So before that's going on. Take a look at this short setup, 946 short setup. Initially, traders were selling puts, selling calls. Bought a few calls. 946. Both lines roll over. Traders buying puts and selling calls. And NASDAQ responds by going lower. All right, so that's the NASDAQ index signal. Oops. Let's take a look at the MAG 7 signal. So this is going to be similar to the S&P 500 equities, which is actually the MAG 7 plus 493. So this is showing, zoom in on this. Put line is pretty flat. Notice delta notional here, less than 10 million, whereas the call line is showing a delta notional of minus 922.23 million. Traders selling calls from the open. Setting up a nice divergent short, again, right around 946. All right, back to Bookmap. We'll zoom in on this. Again, short. This is the first pullback. 600 put wall or 590 put wall. Reversal lower. Again, you can see all the magenta volume dots coming in. Green on the way up, magenta on the way down. Cumulative volume delta stops, roll over. And if you were looking for a bigger move, key level would have been in the NDX 24,000 put wall. All right, does anyone have any questions about the indexes? NQ trying to recover. Some aggressive buyers started to come in. You can see more green volume dots. Let's check NASDAQ. ES. So it looks like to me ES is still moving lower. Magenta volume dots making slightly lower highs. All right, that's ES. All right, let's take a look at some stocks. So really, you could have taken a short in just about anything today. They were selling pretty much anything that was not nailed down. So it looked like some energy stocks were moving higher, and I believe a few financials, that was about it. And of course, tech, the Mag 7 stocks that I follow and trade, not doing well today. So let's take a look at a couple of those. So the first was Google. And again, you could have gone short in, I think, any of these. So Google now breaking down below 300. Note for stocks, on expiration day, usually the opening print, the volume of the opening print is quite large. That's what this huge green volume dot is showing. And we'll see this in all the stocks. Large green volume dot. And Steven says, except Apple. Yeah, I think Apple may be moving higher. Apple is often viewed as a safe haven. So I would expect Apple to behave differently than a stock like Tesla today, or NVIDIA, any of the other Mag 7s. All right, so there's Google, large, bullish opening print, and that was looks like the high of the day. So let's see what options traders doing. And note 305 is the hedge wall. So the trade was the breakdown below 305 with a target of the high liquidity at 300. So again, let's see what options traders are doing. All right, Stephen is asking about all right, Stephen says, why does it move differently? This is just by observation. So again, I think traders view Apple as somewhat of a safe haven. It has a huge, huge cash balance. Well, we'll take a look at Apple. Let's stick with Google right now, then we'll get to Apple. All right, so Google, let's see what options traders have been doing today. All right, so we know 305 is the hedge wall. Break down below that with a target at 300. High liquidity. Heat map and Bookmap shows a history of limit orders in the order book. Those were limit buy orders at 300. Looks like they were consumed. So let's go back to Hero. Now we'll go to Google. Zoom in. And this is going to be the case for most of the stocks we'll take a look at today. Traders taking advantage of high volatility, selling calls. 300 is the put wall. Traders sell calls, shown by the following orange line. Market makers buy the calls, and they have to sell stock to hedge their delta exposure. All right, so that's Google. Zoom out. All right, traders continue to sell calls. Looks like they're also selling puts. But the call sellers are definitely in charge today. Compare the delta notional. All right, that's Google. Bearish opening drive. All right, next stock. And again, you could take a look at just about any of these. All right, Meta, bearish day. Meta has been dropping quite a bit for the last few days at least, maybe the last week or so. All right, Meta, 600 key gamma strike, put wall. And let's see what options traders are doing in Meta. And we know there were some pretty angry sellers at the open, shown by all the magenta volume dots. So again, let's see what options traders are doing. So again, call sellers, taking advantage of high volatility. Although there's quite a bit of put skew in a lot of instruments, traders still selling calls. Break down below the 600 put wall key gamma strike. Traders sell calls. They finally take the foot off the gas right around 10:15. Meta consolidates. So net for the day, they have been selling calls and selling puts. Shown by the positive delta notional here for the put line, negative delta notional for the call line. Hello, John. Welcome. Glad you're here. John asked, do you ever look at Hero using the next expiry filter on Fridays, considering the large volume of ZTE, zero DTE options about to expire? Yeah, we'll take a look at that. So there's Meta, call sellers. Traders sell calls, market makers buy the calls, and they have to sell stock to hedge their delta exposure. Huge magenta volume dots. Break down below 600. Nice entry point for a short. Down to 595. All right, that's Meta. All right, so those are two of the 7 Mag 7 stocks. Let's take a look at a couple of others. First of all, AMD. Another stock on the move today. Large magenta opening print. And by the way, I'm concentrating on reactions at levels today, just like I did earlier in the week. That's one way that I like to trade, is watch for reactions at these levels, or key Spotgamma levels as entry points and or targets. All right, so there's AMD. 200 hedge wall key gamma strike. Did act as support earlier today. Now AMD is finally broken down below that level. Traded from 200 up to VWAP, reverse lower, break down below 200. Now that 200 level may be acting as resistance. Next target down below, high liquidity at 198. Let's see what options traders are doing. Go back to Hero. Go to AMD. All right, AMD, again, traders selling calls. Take the foot off the gas when AMD gets down to the 200 put wall, key gamma strike, hedge wall. I think that's an important level. Acts support, call buyers come in. Then you start selling calls. All right, so now it looks like some call buyers have come in. So earlier in the day, traders were selling puts and selling calls. You can see the blue line was up in this positive area right here on the scale. Then traders started buying puts. And that's when AMD started to roll over. All right, so that's AMD. Clear target at this key 200 level. Put wall, key gamma strike, hedge wall. All right, some call buyers have come back in. So maybe now that 200 level will not act as a resistance. We'll come back and check on that. All right, next stock, Micron. Again, Micron reported earnings earlier this week. That was on Wednesday afternoon. And I did post a setup for Micron yesterday, posted that in Discord and the NX. Let's zoom in on this. All right, so Micron breaking down today. key targets, and I'm just showing the levels at the zeros and the fives. So you can see the key targets down below. High liquidity, limit buy orders at 430, 425, 420. So let's see what options traders are doing. Go to Micron. So traders taking profits. Again, selling calls. They're also buying puts. Reversal right below the 450 call wall key gamma strike and down to the 425 put wall hedge wall. So from one level to another, 25-point drop as traders sell calls. Initially they were buying puts, took their foot off the gas. Looks like a large block order, institutional order. Then most recently, right around 1230. Now traders buying calls, buying puts, continue to sell calls. And Micron is broken down below this 425 put wall, hedge wall level that acted as support before. Right back to Bookmap. One thing I wanted to point out, I use this market pulse price change indicator here in the subchart to highlight entry points. In this case, for short, I'm looking at the bright green extremes. These are the more the deeper pullbacks that you can use for short entries at or near the market pulse price change extremes. So move down, just reversal below the 450 call wall key gamma strike. Liquidity targets 430, 425, 420. And again, remember 425 is the hedge wall put wall that did act as support earlier. All right, now some angry sellers coming in. Large magenta volume dots breaking down below 420. Next target down 415. All right, one more stock I want to take a look at, Western Digital. Another stock that has been very strong and traders definitely getting out today. So let's see what options traders have been doing. Western Digital, and pretty much they're selling everything. So in Western Digital, traders are selling calls, buying puts, shown by the following orange and blue lines. Note the delta notional is much smaller than some of the other stocks that we took a look at. And primary target, key target, 300 key gamma strike, and now Western Digital is finally broken down below that level as the afternoon sell-off starts to gain steam. Traders selling calls, buy puts. Market makers take the opposite side of the trades, and they have to sell stock. Western Digital continues to move lower. All right, one other stock I wanted to take a look at, and there were several stocks in the news. Super Micro, FedEx, I believe FedEx reported earnings, gap up after earnings. Traders taking profits, I guess, in calls. So FedEx, I don't have it at Bookmap, but we can take a look at Hero. Traders selling calls from the open. Break down below the 370 key gamma strike, 365 call wall, down to the 360 hedge wall. All right, John was asking about next expiry, so let's take a look at that. All right, so the lines that I'm showing now are all expirations. So this includes options that expire today, next week, next month. Then next expiry for a stock like FedEx, it would show options that expire today, and those are shown with the calls shown with the green line, and puts shown with the light blue line. So this is showing that traders are selling longer term calls. So these could be calls that expire next month, as well as calls that expire today. So it looks like maybe a little bit less than 2/3 are calls that expire today, and they're taking profits or actually, you don't know, initiating positions or taking profits. And then some longer term calls, also initiating or taking profits in long calls. So you might be able to find that information in Flow Patrol on Monday. All right, so that's FedEx. I didn't have room in Bookmap, but another stock that gapped up before earnings and then reversed lower as traders started selling calls at the open, and broke down again through the 370 key gamma strike, 365 call wall, and down to the 360 hedge wall. All right, I'm going to turn off puts and calls, go to total. I'm going to leave next expiry on. Let's check the S&P 500. So we can see a divergence here. It looks like the 0 TDE options trade shown by the teal line here, and this is the total signal, is actually positive for the day, whereas the longer term options expire today and beyond negative. All right, let's turn that off. All right, let's go back. Let's check the S&P 500 now. Wow. So why were we looking at stocks? ES broke down below the SPY 650 put wall, down to this combo level. And you're welcome, John. Looks like found support, at least briefly, at the combo level. All right, so right now, ES is down 1 1/3% today, NQ 1 3/4%. RTY, Russell, about 2 1/4%. Very bearish day. Traders dumping everything before the weekend, I guess. VIX up to 27, 12.5%, up 12.5%. So that is that's the S&P 500 broke down below this chop zone, below the Spotgamma implied one-day move low, down to and beyond the 650 put wall. Let's take a look at Trace. The Trace Gamma heat map. All right, so there is some positive gamma down below at around 6,500. Let's take a look at one other thing here, and let's go open up Equity Hub. I'm going to go to the total, I'll go to the synthetic open interest model, take a look at SPX, put and call impact chart, and look at this strike right here. This is the, so every 3 months, JP Morgan has a fund, and a fund of stocks, and they protect it with a collar. So they sell out of the money calls and buy an out of the money put spread. So this put spread for this JP Morgan fund The long put is right here at 64.7. So price continues to move lower. Now this expires at the end of the month. So the last day of the month, last day of March, this is when that expires. So if price moves down and expiration approaches, the influence of the strike will become larger as its gamma increases. Remember, gamma is greatest at the money at expiration. So as price moves down toward the 64.75 level, its influence will increase as time passes. All right, Hero Signal continues to make lower highs. Still a very mild number here at minus 588 million. And that number can exceed up to 10 or 12 billion. It's a very bearish day. All right, anyone have any questions, comments? Last call, questions, comments? All right, everyone, thank you very much for watching. Have a great weekend. Look forward to seeing you on Monday, and we'll take a look at the aftermath of the options expiration as well as weekend events. All right, so everyone, have a great afternoon. Have a great weekend, and I will see you on Monday. Thanks. Bye.